Hi, this is Seth David from the world-famous Nerd Enterprises Incorporated, bringing to you a very special screencast on Storage Wars, QuickBooks for storage unit inventory, purchases, and sales. Knowledge is power. Make an impact by learning more. Call me right now at 866-945-8070 for information about private trainings. We send you a link, you log in with us, share your screen, so we can coach you through on exactly what you need to learn how to do on your own live QuickBooks file. Afterwards, we send you a link so you can watch the recording of our session as many times as you need. Hi, so if you're like me, then you love Storage Wars, the television show about the guys who go and buy stuff in abandoned storage lockers, and then most of them resell it, hopefully for a profit. And I don't know about you, but my favorite characters are probably, it's between Dave and Barry. Post your comments below and let me know who your favorite Storage Wars character is. But seriously, as forever the accountant, I'm always thinking about the accounting implications of this, especially because it's an interesting business model, and the show makes it look, of course, like it's so easy to go into these places and, you know, buy stuff and make money. I'm sure it's not nearly as easy as it looks, but still, I just think about the accounting implications. I think, okay, when I teach accounting to people, when I teach QuickBooks, I always teach people in terms of understanding how to record the accounting on these things. You have to break up the transaction into as many individual components as you can think of during the process. So, for example, these guys show up to these storage units with a ton of cash because these storage facilities don't take checks. So they have to take cash out of their, I'm assuming, business account, for those of them who are in business doing this. And that cash is what they show up with to buy this stuff. Then the next thing that happens is, you know, they bid on things and they win a locker. And the problem that I noticed is they spend, let's say, $500 on a storage unit, and that's one lump sum for everything that's in there. Then they go in and assess the value, and I'm sure a lot of the stuff is junked, and it's not even ever, you know, they're just going to throw it out. So you're left with the things that you expect to be able to resell, and then we have the assessed value, and that's what we see on the show. Is they give you the assessed value, that's resale, what they're going to sell it for, of each item, and then the total. So they see, did they make a profit? If they spent $500, hopefully they found goods that are valuable enough to resell, and that aggregate to a total resale value of something more than what they spent on the locker, and that's their profit, right? And that's what they show you on the television show. So I think, though, in terms of, okay, but reality, these guys are in a retail or wholesale business where they're buying stuff and then they're reselling it, hopefully at a profit. So when I buy the stuff, I need to put it into inventory. Especially, you look at a guy like Dave Hester. He's got these big warehouses, it looks like, from the show, where he, you know, brings the stuff back, stores it, and then people, I'm sure, go into his place and they buy the stuff. So the reality is he can't just expense what he spends on the storage units. It has to be brought into inventory and tracked that way. And then when it's sold, it has to be costed out. And the question is, how do I assign the value, the cost of the inventory? We see the resale value per item, but the cost is described in terms of a lump sum total what he spent on the unit. So I thought it'd be fun to create a template, such as the one you're going to see here, which will make it very easy to calculate the cost on something like this. So whether you're somebody who does what these guys do, or otherwise you have a situation where you're paying a lump sum for a lot of inventory, some of which you might use, some of which you might never use, but the bottom line is where you need to allocate the cost based on what you spent, this worksheet will help you do it. So if you get the worksheet, you're going to click here where it says Start, and we're going to fill this out. Then we'll go back and review the different components of the accounting process for some of these guys. So the way I set this up was based on the model of the Storage Wars television show. And so let's say the auction date is today, it's January 18th. The unit location, let's say, is Burbank, California. And unit number, I just thought that would be information I'd want to track, so later on I can keep, you know, records of, you know, where I bought stuff and where it came from and so on and so forth. And let's say we spent $500 on the unit. Now over here you put in your item descriptions. I just put filler information in there. And if you need to, you can insert lines. Just be aware that as you insert lines, you're going to need to copy and paste some of this other stuff down. Okay, and we'll just fix the fill on that. So that's easy enough to do. You'll fill in your descriptions, your item SKU. What's in gray with the gray background is calculated. All you need to do is, once you've entered in the total spent on the unit, is enter the assessed resale value of each item. Now, this is going to be what you expect you can sell for. This is what you're going to put on the price tag in your warehouse, wherever you're selling it out of. So you put the assessed resale value. Let's say the first item is worth 150. Notice it shows the total item cost at 500 because that's all I'm selling so far is that one item. What this worksheet does is it reallocates everything based on a percentage of the assessed resale value to its total. So if I now put in the next item is worth $200, notice what it does. It allocates the cost. I'm still operating at a loss here. Let's say I hit the jackpot with one item and it's worth $1,000. I enter that in. Now I'm profitable, right? And let's just for kicks throw in one more item for $345. So now what I've got is a worksheet where I can easily take this information and put it into QuickBooks. Now, you're in a business like this, chances are the items you sell are unique. So some people wouldn't necessarily want to describe all that detail in QuickBooks. I would say do it. First of all, the databases have gotten robust enough to handle it. And secondly, I would think it would be important information to know specifically what item you sold and what it cost you and what you sold it for, what the effective cost was. And that's what we've got here. So now let's go over to QuickBooks. And before we enter in the items, let's back up a minute and talk about what happened in the first place. The first thing they did was before they went to the storage unit that day, they had to take cash out of the bank. So how do we account for that? The way I would do it here in QuickBooks is we've got I set up a bank account called cash on hand. iBank is whatever their main operating bank account is. And we're just going to record a transfer here. Right? Essentially, we're transferring money from the bank account to your pocket. So we're going from iBank to cash on hand. So let's say they come in with $10,000. Okay? Now they show up with $10,000, but they only end up buying one unit for $500. So we're going to write a check out of that cash on hand account to whatever the storage facility is, and I would want that information in QuickBooks. I would set them up as a vendor. So Burbank Storage, let's just make something up. If I could type, we'll set them up as a vendor, and $500 is what I paid for my storage locker. And now here's the kicker, is this is where we really want to bring these items into inventory. So we can do this a couple of ways. Let me show you the simple way for now, because what I really wanted to do was I wanted to have you use this dialog here to work right off of, in your inventory parts, right off of the worksheet that I've created. So here's where you'd bring it in and you would assign the cost and bring it into inventory. Problem though is you still have to account for the actual expenditure of the $500. So the easiest thing to do at this point really is to come over here into your items tab now and break it up. Now remember, here we're entering in what the cost is. So, and let's close this because this will slow it down. What we're going to want to do is we're going to enter in each item. So in this case, I would come over here and you can copy item 1 in there. Right? And it doesn't find it, so I have to quickly add it in. Okay, and it gives me the dialog. And essentially I have to assign the income account. We'll just call it sales. Obviously in your specific business model you may want to have a more specific account for that, but this would be merchandise sales. It's where I'm, where I'm going to track the income once I've sold the item. And I don't need to worry about entering the cost because I'm about to assign the cost based on my purchase transaction here. So I don't need to do that. So I just need to assign the income account for now and click OK. And then I can put a description here if I want. The quantity is most likely going to be one of them unless I got several. And then the item cost is $44.25. Okay, and it says I've changed the cost. I can say yes, it'll update the cost if I ever use that item again. Then I'm going to do item 2. And again, we're going to set this up. Sales, okay. One of these at $59. Okay, item 3. Obviously, you would have a more useful description for this. Sales, okay. One of these at $294.99. And we may end up with some rounding issues here. We'll find that out in a second. Add this one in real quick. Sales. One of these at $101.77, and let's see we do have a rounding issue of a penny. So at that point, I don't care. I'll just take the last item and knock it down by a penny so that it rounds out to the actual 500. So this will put the items in inventory. Now keep your eyes on the balance sheet here. Once and it's giving me these annoying dialogues. Yes, refresh the report. So notice here, I put the $10,000 into cash on hand. I took it out of the iBank. Now, notice when I save this check, it's going to put these items, you're going to see inventory show up with a value of $500. Save and close. Now, and there it is, $500. What I did not do is I did not put the price in, what I'm going to sell it for the simple reason that I don't have the opportunity to do that when I'm entering the check and I'm in the items tab. All it lets me do is put in the cost. But no harm done. Now I come over to lists, add multiple list entries, show me my inventory parts, and boom, I can very quickly come over here and enter in what I'm going to sell these things for. So the first item was for 150. The next item is 200. The next item is 1,000. And the last item is 345. And then I can just hit Save Changes. 4 records saved. Okay. Done. So now when somebody comes into my store and buys it, it's very easy. I'm going to create a sales receipt. Customers, create sales receipts. Where is it? Enter sales receipts. And we'll just put in a quick customer here. Always right. And this customer is going to come in and buy item 1. See, it brings up the price. This is what we're selling it for. This way I don't have to worry about remembering or going back to that worksheet later. You load up QuickBooks with the information it needs. Put in our description. We're selling one of them. Now, let's go to the profit and loss, because now we're going to have a sale. I want you to watch what happens. The inventory is going to go down. The profit and loss is now going to show the sales and the cost of goods sold. So we're going to see the profit on this one item. It's easy to see when you just have a brand new set of books with just one transaction. Save and close. Boom. There's my sale of 150. The cost was $44.25. There's my gross profit. Balance sheet updates. My inventory has come down. I have undeposited funds based on that sale. I go to banking, make deposits, and let's just assume that the person paid by check. I put that in. It goes into iBank. Save and close. Boom. Now my iBank goes up. Now I still have the $9,500 cash on hand. I'm going to assume that since these guys are in the habit of going to the storage units, they're not going to necessarily put that cash back unless for some reason they know they're not going back to a storage facility for a while. If they do put the money back into iBank, then you transfer it back. Otherwise, you leave it here. Now, then the question comes up, well, what if some of it gets used for personal use or they spend it on lunch? Well, you have to just account for it by writing checks out of this bank account. So if for some reason they said, you know what, I kept $1,000 for myself, took it home, bought my wife a nice gift, then it's simple. We just write a check out of that cash on hand account, and this would come out of shareholder distributions. Right, so that's how we would account for the fact that they use some of that cash for something other than the business. And of course the payee would be themselves. So we'd save that. And boom, now cash on hand is 1,000 less, and there's your shareholder distributions showing up right there. So that, my friends, is pretty much how you deal with the entire business cycle here. If you are in the business of going to storage units, buying the stuff, and reselling it. And you got a little bit of a lesson on how to handle some inventory situations that are a little complicated. So as always, post your comments below. Post them above. Actually, I don't think you ever get a place where you post them above. Post them below. Let me know what you think. If you have any questions, I'm going to put the template up in my knowledge store for sale. I haven't decided on the price yet. And I'm going to make the QuickBooks file available along with that template so that if you want to sort of watch the video and follow along exactly what I did in QuickBooks, note that this is QuickBooks 2012, so it will not be compatible if you're not using QuickBooks 2012. So you know, if you get the template and you get the QuickBooks file, but you're using an older version of QuickBooks, all of this will apply, but you won't be able to open the sample file. Just know that, so you don't have to email me later and say, hey, I couldn't open the QuickBooks file. And that's how people say it in their emails. They say it just like that. Hey, I couldn't open the QuickBooks file. But all kidding aside, get the template if you think it'll be useful to you. If you have any questions, comments, concerns, please register them below in the comments, whether you're at the video or on the blog. I hope you're having an absolutely fantastic day, and I do look forward to seeing you on the web. Hi, this is Seth David from the world famous Nerd Enterprises Incorporated, bringing to you a very special screencast on Storage Wars, QuickBooks for storage unit inventory, purchases, and sales. Knowledge is power. Make an impact by learning more. Call me right now at 866-945-8070 for information about private trainings. We send you a link, you log in with us, share your screen, so we can coach you through on exactly what you need to learn how to do on your own live QuickBooks file. Afterwards, we send you a link so you can watch the recording of our session as many times as you need.